Hey everyone, so you're doing well. Been a while since I've done a video. Figure I'd hop in here and go over what I've been doing with my trading. A lot has happened. I have passed phase two of my Forex Fund's $20,000 evaluation account, so I am currently trading live. And that's been since Friday, this past Friday. So I'm up uh, about $500 on the account so far. So that's really good. Um, I am still using my indicators, but I did want to go over something that's unique that I'm doing is I'm using some of the smart money concepts ideas, not implementing it to the T or any specific strategy. I'm just kind of fitting certain elements of SMC into my trading. And specifically what I'm doing is I'm trading fair value gaps. So if you're not aware of them, there's plenty of information, free information out there that will help explain. But the short of the answer or description of what a fair value gap is it's a push in the market. So if you look at this candle right here, it's a difference between the high of the previous candle and the low of the following candle. So you can see what happened in that time period is that it created a void where there is no wick, there is no price action, meaning that there was all buyers and no sellers were able to jump into the market. And basically the idea is that at some point, it doesn't have to happen immediately, but at some point in the future, this gap is going to get filled with price. You can see what happened over here. Later on, it actually got filled about almost halfway, not quite. This one looks like similar, equal lows right there, but it did dip into it twice, but it didn't completely fill it. So what I've been doing is a variation of that. Some folks will trade the 50%, some folks will use it to trade towards, and all of that is valid. What I've been doing is looking for after the fair value gap is formed. So at the close of this candle right here, the fair value gap is formed. And what's been happening is on the very next candle, or several candles after that, um, if price enters or taps the top, that's my entry point. Now you can see here this was not a good example because it didn't get filled, but it did get filled over here. If I would have held out, now I didn't. I haven't been trading it in that fashion, but that is certainly a way to trade it. What I've been doing is just following it up. So what I mean by that is that gap did not get filled. Okay, let's look for the next one. And you can see it did actually create another fair value gap on the next candle right here. And then at the close of this candle, you can see price came down, tapped the top, and then shot up. And that's my trade. So I've been using basically the very top, or sometimes what I'll do is I'll let price enter and then place a stop above it or below it, depending upon if I'm buying or selling, and then letting it take me in the market. And the stops have been placed at the start candle, at the low of the start candle. So you can see the candle to the left is the stop loss. And I've been doing about 1.5 R has been really optimal for setups. If I'm scalping Asian session, which is working great, I'm just doing 1 R. But you can see in these higher volatility, this is the London, US, New York crossover time. You can see it, that was easily 2R trade. And so, and the nice thing is that they're really easy to pick out. Um, you can see here, we had during Frankfurt, we had another fair value gap, a small one, but you can see price sort of trickled up, boom, tapped it, and then just shot down 25 pips. Asian session, very similar. Of course, not as much volume, so it's not going to be as big of moves, but the same concept applies. You can see now in this one, you can see the price did actually breach, and that's perfectly fine because again, I have my stops placed at the first candle's, in this case, high. So it would have been 20 pips. Now it took a while, but it did get 1.5 R eventually on that one. But Asian session, I've just been scalping and not looking to stay in trades for very long. So I didn't enter this trade, but I would have definitely manually exited probably 15 pips or so. If I'd fallen asleep or was in Frankfurt, I certainly would have looked for exits at some point in here. Um, Also, of really unique use of these is to not just trade the fair value gaps, but I'm using my indicators as well. So you can see here during Asian session, I had this. This kind of might be kind of hard to see, but I do have an arrow indicator. There's a bullish arrow there. There's a bearish arrow here indicating a sell. Now, as you may know, you can't just trade buy sell arrows. You'll go broke. So to confirm this, one of the things I've been using is fair value gaps. And in this particular instance, it's really uh, pretty important to see because it was the previous day that had a pretty big fair value gap formed here. And you can see it was not filled. It was not even touched um, until the following day, where it finally got completely filled. But in Asian session, knowing that this gap was here and that knowing that price has to at some point fill it, this would have been a high probability setup to take. Just jump in on that signal because you know that this particular gap, either a portion of it, 50% of it, or all of it, in this case, is going to get filled, which it did. So that's another way that I'm using fair value gaps. So anyway, that's what I'm doing. Hopefully, this is of interest to you, valuable to you, and encourage you to go research fair value gaps because it's been pretty beneficial. So anyway, hopefully you're doing well. Thanks for watching, everyone, and take care.